Bloomberg Audio Studios. Podcasts, radio, news.
This is the Bloomberg Daybreak, your podcast available every morning on Apple, Spotify, or wherever you listen. It's Wednesday, the 16th of October here in London. I'm Caroline Hepker. Coming up today, shares in ASML plunge as global chip stocks shed more than $420 billion in market value. Donald Trump makes the case for huge increases in tariffs in an exclusive interview with Bloomberg. Plus, here in the UK, Chancellor Rachel Reeves faces growing cabinet unease over her hunt for £40 billion as pressure over the budget mounts. Let's start with a roundup of our top stories. Shares in Europe's most valuable tech company, ASML, have plunged after the firm booked orders worth around half what analysts had expected. The maker of the world's most advanced chip-making machines lowered its guidance for next year and reported bookings of €2.6 billion. The results caused ASML shares to drop by 16% in Amsterdam. The company didn't give a detailed explanation of why it had fallen so short of expectations, but Bloomberg Intelligence's Mandeep Singh says the prospect of more US restrictions on its China business is one likely factor.
The fact that their buyers are so concentrated and the geopolitical tensions continue and the second half estimates, the comps are tougher, to me this is just a sign of expectations kind of going up to the point where you will not see any positive revisions from the print this quarter.
Mandeep Singh and analysts across the industry found themselves unexpectedly scouring through the ASML numbers yesterday after the company mistakenly released its financial results a day earlier than scheduled. Well, the fall in ASML's stock price has helped to fuel a wider sell-off in the sector that's seen global chip stocks shed more than $420 billion in market value. The rout continued in Asia overnight, with Tokyo Electron sliding by as much as 10% and shares in TSMC also dropping. The negative sentiment around the sector comes after Nvidia's stock price hit a fresh high on Monday on optimism around their latest Blackwell AI chips. Since then, the company's share price has fallen by 4.7%, wiping out close to $159 billion of Nvidia's market cap. Former President Donald Trump has defended his plan to dramatically increase tariffs on foreign goods, saying the proposals would help to protect companies in the US. Speaking exclusively to Bloomberg's editor-in-chief John Micklethwaite at the Economic Club of Chicago, the Republican nominee for president proclaimed his belief in the policy.
To me, the most beautiful word in the dictionary is tariff, and it's my favorite word. It needs a public relations firm.
Trump says that he will carry out an aggressive campaign of deregulation, renew expiring tax cuts, lower the corporate tax rate and offer fresh tax reductions and benefits to bolster domestic US manufacturing. The former president also was asked for his thoughts on the relationship between the Federal Reserve and the US president.
I think it's the greatest job in government. You show up to the office once a month and you say, let's see, flip a coin. And everybody talks about you like you're a god. Oh, what will he do? I think that if you're a very good president with good sense, you should be able to at least talk to him. I don't say make the decision at all.
Trump also moved the markets when he was asked about breaking up Google, saying that he is not a fan and the company treats him, quote, very badly. Shares of Alphabet pared gains as Trump was asked about the company. Now, those comments from Trump come as the European Union has prepared a list of US goods that it would target with tariffs if Trump were elected US president. Bloomberg has learnt that the bloc has drawn up private plans on how to retaliate against Donald Trump if he makes good on his trade threats. The Republican nominee has proposed a 10% tariff on all imports and a crackdown on EU regulators taking on US tech giants. The latest data shows that EU imports total 350 billion euros worth of US goods a year and exports 500 billion. Their appetite for high-end purchases once seemed insatiable, but now China's economic woes appear to be seeping into luxury profits. Bloomberg's Tiwa Adebayo has that story now.
Luxury bellwether LVMH is seeing sales tumble in China. According to the group CFO, consumer confidence in the region is at an all-time low, sinking to levels not seen since the pandemic and hammering high-end revenue. Analysts had expected a small third quarter gain for the fashion giant, but instead were met with the worst performance over the period since 2020's second quarter. LVMH's American deposit receipts plunged by as much as 10% after the announcement, as did the likes of Gucci owner Kering's. US rivals Ralph Lauren and Estee Lauder saw shares fall in New York trading too. In London, Tiwa Adebayo, Bloomberg Radio.
Here in the UK, cabinet ministers have been alarmed by the scale of spending cuts being proposed by Chancellor Rachel Reeves in the upcoming budget. Bloomberg has learnt that Reeves is asking departments to find steep spending cuts to fill the £22 billion fiscal black hole. Bloomberg's James Wilcock has more.
Downing Street faces bleak warnings from all sides. From cabinet ministers who say proposed cuts are not feasible. Then from non-doms who are meeting the Prime Minister today to say they'd rather move their wealth elsewhere than pay more. And from the IMF, who says Britain could face a market backlash unless it stabilises its national debt. And fast. It's difficult to imagine a way to please all three of those without breaking tax pledges made in the election. But that is the fiscal straitjacket the government and the Chancellor have been warning about for months. Getting out of it is likely to be very painful. In London, James Wilcock, Bloomberg Radio.
Now, in a moment, we're going to get more on the fiscal straitjacket that Chancellor Rachel Reeves must deal with under pressure from all sides over the budget on the 30th of October. Bloomberg's UK correspondent Lizzie Burden will be with me for more on that. But first, this story really grabbed my attention. So this is a new study that shows just how bad gender diversity is in private equity. Bloomberg's Isabella Ward has been writing about a new study that has the data that shows that private equity is driving women out of board roles and leadership positions at European companies. It's pretty fascinating. This study is from the consultancy LCAP Group, and they looked at 1,424 European companies, that is. They find that the average percentage of women in leadership positions has tumbled 16% by the end of the private equity investment holding period. So that's down from an average of about 20% before they invest. I mean, 20% is already pretty weak and a low proportion, but that it gets worse over that time frame, I think, is pretty fascinating. I think it's quite remarkable. Also, the drop in female representation, likely due to leadership teams and boards being expanded during the investment period of private equity, and that the majority of the new hires are male. This, according to the LCAP report. You can read that story. Isabella Ward, as I say, has written it up on the terminal, and you can also sign up for the Equality newsletter for more stories on this. They report weekly on how gender, race and class are shaping capitalism, a story I read on the terminal today. Now, let's think about then the big story in market shares. In semiconductor equipment maker ASML plunged the most in 26 years after it saw only about half the orders that analysts had expected. It's a startling slowdown for one of the key bellwethers in this industry. Joining me now to discuss is Bloomberg anchor Kriti Gupta. Good morning, Kriti. How bad were the ASML figures and what is driving it?
Brutal, I think, is the perfect way to describe it. When you talk about the numbers that they reported on bookings alone, Caroline, I'll just get right to it. 2.6 billion euros for 2025. That is less than half of what analysts had expected when it comes to the same period of the third quarter. 5.4 billion euros was the estimate. So you can really see where the pain is coming from. This wasn't just a miss. This was a miss by massive proportions. It's worse when you look at their forward-looking guidance as well. It's not just about their bookings for the third quarter as well. And the forward-looking guidance numbers aren't very good either. When you look at the breakdown for the whole of 2025, they're expecting net sales to be between 30 to 35 billion euros. It was 40 billion euros previously. I think what we're really seeing here and what's indicative is this broader slowdown in the industry that is not just showing up in ASML as a chip equipment maker, but in the core chip makers You're seeing it in NVIDIA, you're seeing it in AMD, you're seeing it in Intel, Qualcomm even. There's a lot of geopolitical uncertainty that's weighing over all of this, not to mention a slowdown in a market that is slightly oversupplied with chips right now.
Yeah, okay. How much, though, is ASML stuck in Washington's chip war against Beijing?
It is nestled right in there, stuck between a rock and a hard place, for lack of a better term. But this is really important because it's not just between what's going on in Washington versus China and Beijing, but also how the Dutch government plays a role in this as well. And that's really where you're seeing a lot of pushback because, yes, the United States is looking to impose export controls, really trying to limit some of that ASML exposure to China, and given that they're the only player in the lithography machines that can create the kind of chips that the U.S. Wants to create and that really the whole world wants to create. But on top of that, they have about 30% of their revenue that comes from China. So they're stuck there from their bottom line. On top of that, they're dealing with pressures that push back against expansion that the ASML is trying to look for. So, for example, trying to potentially list in London as opposed to in Amsterdam is one issue. Increasing foreign labor, that's getting a lot of pushback from the Dutch government as well, given some of the more far-right policies that been put in place. So in addition to being stuck in this geopolitical war that actively affects over 1/3 of their income, you are also seeing pushback in terms of being able to grow and diversify and get access to other pools of capital because of local politics.
Okay, I think that's really fascinating. Thank you so much, Kriti, for being in the studio and talking us through, well, the latest on ASML. Of course, this is Europe's most valuable tech company, and their shares are now down by 1/3 since they hit a record high in July. So a story that we are looking at closely. Let's turn our attention, though, to the UK. The disquiet over the contents of the upcoming budget. It seems to only be growing. Chancellor Rachel Reeves faces pressure from the Cabinet over the scale of spending cuts. Meanwhile, Keir Starmer's aides are planning to meet the Foreign Investors for Britain lobby group about proposed changes to the non-dom system. And you've got an IMF warning as well that there could be a market backlash if debt of 100% of GDP isn't stabilised. Joining me now to discuss is Bloomberg's UK correspondent Lizzie Burden. Good morning, Lizzie. Reeves faces this fiscal straitjacket. It looks ever so tight.
Yeah, well, we were almost joking, weren't we, Caroline, about how many times Rachel Reeves had talked about the £22 billion black hole. So it was a bit of a shock yesterday when we heard that there was disquiet over raising £40 billion. Lots of people asking, has it doubled overnight? Well, the reason that she wants to raise £40 billion on October the 30th is to give herself a buffer so that she can make sure that day-to-day spending is covered by tax revenues. And that means that she's going to have to make, as she keeps telling us, these difficult decisions on tax spending and welfare savings to raise this bigger number. But it is not going down well with the Cabinet. They met on Tuesday morning. Various senior ministers saying the savings that they're asked to make are not feasible. But what's significant is it's not just the usual suspects complaining, the ones who are in charge of, the departments with the highest capital spending. This is a broad range of departments. But on the flip side, if she doesn't make these savings, the IMF is warning that she needs to raise taxes and cut spending to stabilise the national debt, or else she risks triggering an adverse market reaction. Hence why she does not want to look in any way like Liz Truss at the mini budget.
OK. Meanwhile, the non-DOMS lobby group, or a lobby group for wealthy investors set up because of the worries around non-DOM status, they get a hearing, at least virtually, with the government.
Yeah, and to be fair, you would expect so. They're a stakeholder in this policy. But you'll remember the report that said these people are going to leave the UK if you raise taxes on them. So actually the policy would cost the Treasury money. And the bit that is offensive to them is that the Labour government wants to go even further than the previous Conservative government's policy of meaning that non-DOMs pay tax on their overseas earnings after living in the UK for 4 years instead of 15 years. Labour wants to cut inheritance tax breaks on assets in overseas trusts as well. So this is what they're going to be talking about in this meeting. We understand that they're meeting the Foreign Investors for Britain group, who have been working with Oxford Economics on some research about the impact of these policies. And actually it showed that the inheritance tax changes would be a real reason they would leave the country. And when they surveyed 70 non-DOMs, they found that almost all all of them would speed up their plans to leave the UK if these tax plans aren't tiered. So a way round this would A, be to tier it, or B, to impose the rules on new non-doms, but not on the existing trust structures for non-doms overseas assets.
This is Bloomberg Daybreak Europe, your morning brief on the stories making news from London to Wall Street and beyond.
Look for us on your podcast feed every morning on Apple, Spotify and anywhere else you get your podcasts.
You can also listen live each morning on London DAB Radio, the Bloomberg Business app and Bloomberg.com.
Our flagship New York station is also available on your Amazon Alexa devices. Just say, Alexa, play Bloomberg 1130. I'm Caroline Hepker.
And I'm Stephen Carroll. Join us again tomorrow morning for all the news you need to start your day, right here on Bloomberg Daybreak Europe.